Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's a snowy day, but it hasn't snowed in a day and a half, but it's all snow out there, so we're not used to that. And we see it every so often, of course, but we're still not used to it. Let's see what's going on here. Let's see, let's get the Swiss up there. And there is the Swiss. Let's check the chat line to start off with. All kinds of fun news. Oh. Okay, no, nothing there. Let's skip that. There we are. Oh, good. I see us live. I can hear my voice, so this is a good thing. Just double checking the mechanics of it all. Let's get J4X up there. There it is. And there's the Swiss. You can see, been doing exactly what we didn't want it to do in the sense of, we saw it go into the daily buy, and we just assumed that this product, and they were going to really, I thought the Fed really meant it. I thought they were really going to fight inflation. A lot of us thought they were going to fight inflation. So far, no go. They tricked the exchequer in England to raise rates, and I guess they're taking taking a page out of Draghi's, the former ECB president, or was he the European? Yeah, he was the European Central Bank president. He was the Federal Reserve of the European Union. And he would promise and promise and promise, and everybody would get excited and money would move. In the end result, nothing really happened. But he did a really good job with that nice Italian accent, looking very debonair, really looking sharp, I mean, he would do that, and it would go on and on and on, and but nothing would get done. And so, here we are. The Fed, everybody knows the job of the Fed is to fight inflation. And I logically looked at it and I said, okay, now how do they do that? I mean, you got to raise rates across the planet, right? I mean, that's the the reality of it all. But no, they tricked the exchequer in London to raise its rates back in December, when everybody thought for sure the Federal Reserve was going to raise rates, maybe even a half a point of interest charge. But no, here we are going into February, and they've had now 2 meetings and no rate increase. So it's like, wait a minute. I thought you guys were here to keep stability and control inflation and be responsible, and not happening. Not happening. Fascinating. It is a fascinating game they play. But anyway, they've taken a page from Mr. Draghi, which is really cool. But unfortunately, Powell looked more like the Three Stooges. I mean, he looked very confused. Last week, he looked, there were times where they asked him a question, and he would be staring at his papers, and like 1, 2, 3, 4, 5 seconds would go by, and then he'd look up and he'd say, "Oh, I was writing down the question, or I was looking at some of the notes I'd taken." He looked really lost, and I think we have to compare that to Muhammad Ali, the boxer, and what he did in the Rumble in the Jungle against what was his name, George Foreman. He did the rope-a-dope, and I think that's what we're seeing right now. Is we're watching the Federal Reserve do the rope-a-dope, and it's not changing any at the moment. So I imagine once he gets passed and he gets sworn in, then we'll see. Now this morning there are a lot of talking heads on a lot of the financial channels here in the States saying stuff like he is going to be more sensitive than he should be to the way the markets move, and not about the statistics and the inflation. And that is where we're really at the moment. That's a real freak out mentally. Is that he's not going to do what everybody knows he's bound legally to do. It's just another time here where another government employee just does what they want, and nothing more or less. All right, so that's how we woke up this morning. Seeing the markets. You know, as that theme slowly leaked out from you know, the markets, you know, the talking heads, you can see the stock market went from plus to minus, and now the Dow Jones Industrial Average is down like a couple hundred points, and you know, Nasdaq or the Tech 100 on Dukascopy is down like 10, 15 points when it was up 100 points, and the S&P 500, which is you know, was it? Let me see where it's at right now. The S&P 500. You'll be able to see it on here on our what we're showing you. Down 17 points. You can see at one point it was about down 22 points. So, and you can see here the Dow Jones Industrial Average is down 188 now. It's just slowly drifting back up from those lows that were just generated. And you can see here the Tech 100 is actually up 5 points now. So, markets drifted from that, coming to the reality of, I guess they won't raise rates soon. All right, let's get over to the Swiss. You can see here on J4X, you see lots of green hinkies, and you can see the white line that's been moving up above the dashed line. And you can see over here on Chicago Quant, same thing. We've been weekly buy for one full week. And we went into the weekly buy last week from all this action, and we did not expect that. You know, we were in a weekly sell. We kept on thinking, okay, the Fed is going to do what it's supposed to do, and they're going to, you know, we'll see the interest rates move across the planet, as I said in my little opening monologue. And sure enough, nothing's happening. And so what are they doing? They're taking the Swiss up to the top end of the range. They've taken the euro, which is, you know, surprise, surprise, down to the full bottom of its range, you know, like I don't know how many months. Let's take a look at that. There's the euro against the dollar. And you can see here they've taken it to the 0.23 now, sitting there for 3 days. And that's the bottom end of the range right there. That's the top end of the range over the last, was it the last year and a half or so? It's, you know, they keep on bouncing off of these ranges and, you know, coming down. It came off the top of that range, came down, worked its way back up to it, came down to the 50 percentile, back to the top of the range, and back down again. You can see how it follows its range, and you can tell that the central banks are following some type of rule. You know, we've seen the Secretary of Treasurer here in the United States over the last 6 years talk about those rules. In other words, are you manipulating your currency or not? Question mark. You know, when you see hundreds of billions of dollars being invested in the market every month by the central banks, how do you define that concept? Manipulation. How do you define that when they're doing it live to the world every day? So how does some poor little treasurer of, say, Australia, you know, the Ministry of Finance, or the Ministry of Finance in Europe, or the Ministry of Finance in Canada? Speaking of which, people are really pissed in Canada. Did you see that? Trudeau and his wife, the Prime Minister, had to leave their home because of the protests over the weekend. They've had it. People around the world are starting to get fed up with all this mess. Anyway, that's the Swiss. Let's take a look at the euro on J4X and how it's doing the same thing. It's just marching down. You know, something we were not expecting. We saw this bottoming here. It was the anticipation. That was in December of 21. You know, 3 months ago. You know, we thought for sure interest rates are going to rise. And how do you do global interest rate? You know, how do you deal with that globally? And obviously the thing is that they had to convince, you know, the ECB and the Exchequer and everybody else to think about raising rates a little bit. You know, when you're at minus, what's the difference? So you bring them to zero. You're still not paying anything. But no, it's not exactly happening that way, is it? All right, and so you can see here we are at the bottom end of the range. You can see on the J4X and all those red hinkies. And we can see here on Chicago Quant. Let's make that bigger. Let's do that. Like that. As you can see here on Chicago Quant, so we can make that bigger too. Like that. How's that look on the screen? I'm double checking it. As you can see, it's playing with that, you know, 0.23, just sitting there of the range itself. All right, let's check out cable. Boy, do they feel hoodwinked, you know? They raise the rates and then nothing happens across the planet. It's like, wait a minute, I thought we were I thought in the meeting, didn't we say we were raising rates? You ever go to some type of group meeting or something like that, and you think that you understood what they were talking about, and everybody was agreeing with it, and you saw everybody shake their head, yeah, yeah, and you walk out of the room or wherever it is, or the Zoom, and you go, wow, I guess we're going to be raising rates in December. So someone at the Exchequer goes, all right, we're having our meeting 2.5 hours earlier than the Federal Reserve, so I guess we'll raise our rates a little ahead of them, just to show we're in unison with them or something like that. They raise their rates. 2.5 hours later, the Federal Reserve comes in and announces that they're not raising their rates. Ooh, do you feel burned? As you can see here, it's just been drifting south on the J4X, just slow, steady slide with the hinkies. You see we've been buried down at the bottom for over about a week now. Something like that. What is that? That is the what's the date of that? Yeah, that's the 20th. And there's like the 20th. Let's move that over a little bit more. Like that. And you can see there. So that's the 26th. So this is basically the 20th. Now we've been in a daily selling this product on our work here at Chicago Quant since there. Since the 17th. And you can see this thing topped out on J4X. So we can get that figured out there. There's the 13th. It curved here a couple days ahead of time, and you can see let's see what the hanky shows. Why is it doing that? I'm trying to get it to show the date. There it is. There's the 16th. So it started giving us a red hanky on the 16th. Now our work confirmed it on the 17th. This thing started showing you the weakness a day ahead of time, which is pretty cool. And you see, it drifted down, and now we're flirting with. Whereas earlier in December, we were flirting with the bottom end of the cable range, and that had been going on for a long while, like over a year. And we thought, okay, this is it. This is load up the boat. This cable's gonna go. And we got into a daily buy, and a week later we went into a weekly buy, and it just kept on climbing. We were thinking it hit the 50 percentile, and we thought, wow, this thing really wants to do it. They're going to raise rates. Defend us, oh overlords of the financial markets. Defend us. Stop this inflation. And next thing you know is Butkus. Look at that. Oh well. That's what happens when you trust government employees. All right, so there we go. Jump over to Mr. and Mrs. Turkish Lira, the real laboratory, the real participator in the marketplace, defending its currency and its population. How about that? I'm able to defend President Erdogan after 10 years. Finally, can defend him with his policies. It's like, wow, this is a pretty good policy he's got going on there. Free puts. He gives out free puts for every buyer of Turkish lira. So it's like, hey, not bad. I'm into that. I'll take free puts. There we go. And there's the dollar Turkish lira. You see it's inside that little range we've talked about now for a couple of weeks. Right there. And it's pushing into the sell there this morning. You can see that. We closed in the weekly sell a couple of weeks ago. Now we're going on a third week. And that's a good thing, That's a good thing that the Turkish lira goes down against the dollar, which means less inflation for those in Turkey. And let's just take a look at it on J4X. Right there. Look at that nice tight range, very consistent, no wild fluctuations. That's the way you want your currency to be. You want it to be calm, not wild. You don't want the buyers to come in to have to, to buy goods from your country and have to, get beat up by currency translation. Hence, that's why we have all these. That's why we have this webinar. We deal with currency translation and deal with buying and selling of currencies. Not everybody is trading it as much as they're doing it for literally commercial reasons. Commerce. Maybe they're buying oranges from the north of the country, or they're buying, or the west of the country. I guess it would be east of the country, or maybe they're doing something else, like buying cloth or fabrics or machines or whatever they're buying. Wheat. Who knows what they're buying? Whatever Turkey produces. But the one thing is that it allows foreigners to be able to take their monies from another country and bring it to this country and pop up business, customers. That's what they call them, customers. All right, now let's take a look at the euro Turkish lira. Right, there it is right there, Turkish lira, same thing. Playing with that bottom end of the range, looking very calm right there. After wild and woolly days like this stuff, wild and woolly days where we've seen a product over the last 8 or 9 years go from 1 to 18. Ow! Talk about hyperinflation. Let's put it up over on Chicago Quant. There it is right there. Same little box, just like the dollar against the Turkish lira. You see, this thing's been in a sell for 3 days now. This is the third day. And you can see that the weekly is really starting to accelerate. They're breaking the bottom end of the time manifold here on the weekly. You can see the white lines cleanly through it. So, and look how tight the daily is right there. It just tells us that the action has faded in many ways for the better for the country. Okay. We'll keep an eye on that like we do every day, because this is truly the best of the experience of good government policies versus bad. That's how that works. All right, I'm taking a sip of my tea, so I'm taking a quick little break of sip of tea. All right. Now, let's see, where do we go from here? We go to Canadian, as I mentioned earlier. People are getting fed up in Canada. Right there. Maybe the picketing really helped out a little bit. Look, it's trying to make a little turn down. But the thing is that I saw oil this morning, and oil was heading down when I saw it this morning when we sent the charts out. So let's just take a quick look at oil. There's oil right there. Okay, so they flattened out now. Now they're actually above. So that's why we're seeing the Canadian dollar move against the American dollar in the downside. You can see we've topped out. We didn't hit the top end of the range there. And this one got stuck in the same situation over, what is that, all of January, where what did it do there? There's a 50% down. So it kind of banged against it for a while. For a couple of weeks, it was banging against it. Tried to turn up to the top end of the range. You can see last week it just missed getting into the weekly buy by the hair of its chinny chin chin, but this morning, no worries there. And look at that, it's trying to lift up. I don't know, we'll see. I'm not too confident of anything moving out of its range until they start raising rates and changing. Oh, that's not what I wanted. Changing rates in the United States and then across the planet. You have to assume we're going to stay on the same course we have been on for a couple of years now, and that is where currency pairs stay inside a range that the central banks have established, and they'll just carry them to the Fibonacci sequence inside of it. It seems like it's been like clockwork, which amazes me. The technical analysis is that accurate. We've never seen this in my 40 some odd years. These last 6, 7, 8 years, the technical analysis has never been better. It's amazing. It's very enjoyable, very profitable. Another sip of the tea. Just enjoy a little hot tea in the morning here. It's 7 degrees minus Celsius here. We have snow on the ground. All right. From there, we jump over to. We do start taking a look at metals and energies real quick, just because of the Canadian, and that's how we usually do it. We always look at that that way. There's the Canadian right there, and you can see all those green hinkies moving up. This is starting to top out, and then on the Chicago Quant, obviously you see it trying to roll over. So we'll see. This will catch up over a couple hours. You'll see the hinkies start to go red if this is going to keep on moving down against the dollar, which is a gain for the Canadian. Less Canadians currency for the dollar. Now let's take a look at the. We're going to leave the Canadian up on the J4X, and there's gold. No, that's what is that? That's crude. That's crude, and you can see it's trying to move down. And it was in a sell on Friday, and it was lower today, but it didn't take out. Yes, Friday's low. You can see it's still in a weekly buy. So with that weekly buy, we assume, Canada will try to roll over, and that weekly that you see going on here on the Chicago Quant will fail after a while. It'll probably roll back under. Let's just take a look at gold real quick. I think I saw gold do the same thing this morning. Yeah, at one point it was down lower. Now it's plus for the day. It's got this. You can see the daily is still weak, and we're flirting with the weekly sell. It's almost like I don't even know what the word inflation means anymore. It does not get the participation in the flight to safety products. That is really where it comes down to at this point. All right. Now from there, we're going to jump over to the South African Rand. Let's put that up on J4X. There it is right there. Still showing that strength, which is telling us that the metals complex is going down, not up, and which just drives me totally confused. What are these central banks? This has got to stop sooner or later. Central bankers have to become responsible adults again. Right now, they're definitely not that. All right, and let's take a look at South African Rand on Chicago Quant. There it is. And there it is right there. You see it's down a little bit. It's still in that daily buy. It tried to get into the weekly buy, missed it by minus 0.01. Close. So maybe someday we'll see things work out the way they're supposed to. But right now the fundamentals, as Janos would say, are out the window. All gone. Fundamentals are just a noise in the background. All right. Let's see. From there, we'll jump over to the ruble. Ruble's been mild the last couple of days. It's been a daily sell for 3 days now. We keep on hearing from the ministry, foreign ministry of the Russian Federation that they're not going to attack. They're just bolstering the front lines. That's all. And you know what? That's the way I see it too. So they sent supposedly blood and medical stuff. Of course, they've got 100,000 troops there. You don't think people bounce into each other doing things? And the president of Ukraine has tried to convince Mr. Biden there are no attacks going on. Mr. Biden keeps on walking around claiming that they're being attacked by the Russians. And the president of Ukraine contacts him and says, "Look, they're not. No one's shooting at anybody. Yeah, there's a bunch of Ruskies over there, and they control a lot of our property over there. But no one is shooting at each other. No one's trying to invade at the moment. And stop saying that Kiev is going to be sacked." Oh my God, Mr. Biden is. Oh, you want to hear the strangest? Here you go. This is a little off course, but it's a classic of Mr. Biden and the ruble and so forth. Is that Mr. Biden went to Pittsburgh, Pennsylvania, on Friday, to have a speech about whatever he has speeches on, because he's kind of weird to begin with. But anyway, he goes to Pittsburgh, Pennsylvania, and a bridge collapse. Now, I know for a fact that he was there to talk about infrastructure because they've taken all this money and put it into some type of infrastructure, but somehow or another, it only seems to take care of climate change. I have no idea how they think they can control the weather. But anyway, these people think that they can control the weather and the planet weather-wise by increasing or decreasing certain elements. Uh, Boy, they'd fail all their chemistry and physics tests if they ever took one. And the end result is that a bridge collapsed. I don't know if it was planned by the locals or what, but a major bridge collapsed. And you know, the national media is not really talking about it. Matter of fact, they're kind of keeping it quiet. They did mention it, and then they kind of walked away from it, and it hasn't been talked about. So obviously, they don't need, you know, because all that money. They keep on asking, where's all that money for infrastructure? You passed the infrastructure bill, but all the money is going to things like climate change. So when do we get some of it? Crazy? I can't even make this stuff up. I mean, it's actually happening in real time. This is not something you make up. I mean, it's like it happens, and they don't seem to be able to control it. But anyway, there's the ruble. They're not attacking Ukraine. Of course, they're on the border. We know that Russia borders the Ukraine. Crimea used to be part of the Russian Federation or Russian Federation. Now it's kind of half and half. Um, yeah, is it right the way it's going? No. But are they being super belligerent right now? Not really. They're just, you know, standing to the sides, you know, and flexing their muscle. That's all they're doing. And don't we do that every day? So anyway, there's the ruble. It is moving down against the dollar, which is a positive thing for the ruble. You can see the weekly is making its first attempt this week to aim towards down again. It hasn't been able to get into out of the sell since the 70 area, and it's been just slowly dragging along. You can see we've been in that weekly buy since there. Alrighty, from there we go over to the yen. You see the yen playing with 5-year highs and dancing along just like the way the ruble is playing around with, you know, highs. You know, it's trying to top out a little bit, but it's been in a weekly buy since here basically. It seems to become a support area here. Let's put that up on there. On J4X, let's go with, there's the dollar yen. And showing that strength. And that's like right there, that's like a 5-year high. We're right near 5-year highs. I mean, it's not far off. You're talking, you know, right there on the Chicago Quant. You know, you're talking about when it traded up to the 116 and change back on January 4th. That was a 5-year high. And here we are dancing along the 115s, you know, 115.68, things like that. We're pretty close. So something's afoot when it comes to what's going on over in the yen. Last one we do is the Mexican peso when it comes to the currencies here. Unless you want to see something in the currencies. All you do is put it up on the chat line. You don't even have to talk to me. Just put it up there. We'll go. I won't even torture you with a question. Unless you want a question. Oh, where's it at? Right there. And that is the peso. Peso has been on that nice little climb on the daily. And we climbed into the weekly last week. You see that? We're in a buy. We'll see how that plays itself out. Does that, you know, when Canada, something happens in Canada, it seems to happen in Mexico too. You know, the situation. I don't know what Mr. Biden is doing. It could be interfering more than we see. Remember, our media likes Mr. Biden enormously well. So they will not show anything that can hurt him. That's why the collapse of that bridge has been shown just a few times and then it's quiet now. And they didn't play up too much more than just a speech, and then that was it. All right, that's all the currencies. I think I'm going to have another sip of my tea. All right, from there we go over to the metals complex. Right there, there's silver. the true disappointment of them all. Boy, as much as I complain about gold, just when it looked like silver was going to get going, it did not. Let's show you silver. Also on Chicago Quant. Where is that at? Right there. It's fallen down $2. It was trading as high as 25.75, and now we are trading down at 22.15. Today's low actually is 22.25, so it's $2.50 down in just a matter of 8 days. It's like, what? And it looked like it was really going to get its game together. Got the daily buy going there. It was daily buy pretty much all the way up. I think that's a bad data point there. And then, you know, we went into the weekly buy, and it gave you that nice little win. And then it goes into a daily sell, and they break down a little, and then it confuses it even more right there, throwing in that buy. And then the weekly rolls over, and now it's down again. Now it's plus a little bit today, just like this morning it was not, but now it is. They're just dancing. And it doesn't seem to be much more than that. Is that they're just kind of there is no representation of inflation when it comes to the metals complex. And you know, you would think, let's jump over to Bitcoin just real quick, and you can see the same thing here. We talked about this last week. Real disappointment that this product is not moving away from the mainstream. Instead, it's part of the gang. It's falling with the stocks, you know, it's falling with the metals, as you can see on J4X there. And if we put up like the S&P 500, where is that at? Right there. You know, it's doing the same thing. It's part of the mainstream. It's not moving separate. It's moving with. And that's not what we thought the cryptos were supposed to do. I thought they were supposed to become very independent, much more sensitive to what was it? What do they call it? Fundamentals and reality. Remember, they were supposed to be the truth. You know, they were supposed to be the real truth of it all. You know, because central banks are not supposed to be able to influence these things. But I don't see any difference really. All right. So from there, we jump over to copper. See what copper's doing. See copper doing the same thing. It's moving down at the moment for the last couple of weeks in a sell since the 24th, and now we are flirting with a weekly sell this week. Right there. Let me save that. So when it comes to understanding the fundamentals, again, technical analysis has been literally the technical analysis has been the leader to marketplace, not the fundamentals. And I guess when you look at the as I started off the webinar with the idea that, you know, they thought interest rates were going to rise, and everybody was like, oh cool, you know, interest rates are going to rise, and here we are past a second meeting now, no interest rate increases. And here we have Mr. Powell said it pretty clearly in last week's meeting. Inflation is higher than the numbers represent. That's what he said. So then why aren't you raising rates? Because that's what the manifesto of the Federal Reserve is. They're supposed to defend against inflation. It's so politically connected anymore that you can't do anything. All right, from the copper, let's take a look at platinum this morning. Right there's April platinum. Kind of hanging around, I guess you could say. It's been a daily buy for a few days, and it hasn't really done anything good. The daily buy is right there. You know, so these last 3 days is the fourth day, and we're just hanging around in the area here. Still hanging in a weekly buy too. So I guess maybe this could be telling us that just don't take any of it serious. This could be just background noise. All right, from there we go over to the energy sector, and we've seen the March contract. Let's take a look at the September contract right there. Kind of sloppy sideways. Went into a sell on Friday, but the weekly's holding up. Let's take a look at it over on J4X. Here's the front month instead. It's showing firmness overall, trying to break down a little here on the lines, like matching up with our daily sell there. But overall, green hinkies are just holding firm at the moment. Now let's take a look at North Sea Brent on J4X right there. Got to that 90 area that some of the professional traders were looking for. And you can see it's off about $1.25 from there. And you show the weakness right there at the same time. From there, we'll drift over to, where do we go from there? We go to natural gas. Natural gas got spiked last week. I mean, it just rocketed because of the expiration. There were 7,000 contracts traded in the last day, and it jumped like a rocket. Let's see if we can find one here. Where are you? There's natural gas. It's the American natural gas trading at $4.80. We're basically up $1 there. There we are. On J4X, same situation. And Chicago Quant, same situation. In a buy since here. Caught pretty much most of that run. It's in the weekly buy here from last week. And what else can we say about that? Not much. Let's take a look at European natural gas. Right there in the euro. Still kind of, this is not really moving much. I understand that the Germans have put a delay to the Nord Stream pipeline. I understand a 6-month moratorium on it or something like that. So, I mean, the confusion over there is confusing the Americans. You gotta imagine the people running our country right now are not the sharpest pack group in the world. So, they're not. Biden keeps on screaming crazy things, and crazy things are not happening, but he keeps on screaming them, and the media keeps on telling you how great he is. So we got a lot of really strange things going on. But I understand there is a bill in the Senate at the moment, possibly blocking Nord Stream. So I don't know. We'll see. The whole thing is very confusing when it comes to fundamentals at this point. Everything is technical analysis. That's all we do is follow technical analysis because the fundamentals are not even remotely in the norm anymore. Another sip of our tea. All right. That was good. Over to, let's see. All right, so that's, I guess that's the end of it all when it comes to the energy sector. So let's take a look at the stock indices. We had there's the Dow Jones Industrial Average. That's the 30, showing some strength in there at the moment. It's trying. Let's put it that way. And I think our daily is doing the same thing. There's the Dow, and it's trying. It's flirting with daily buy line. Still in a weekly sell for a few weeks since up in here. So it's kind of. You can see the volatility has increased, that's for sure. And then we go over to the S&P 500 right there. Same thing. It's flirting. And it's giving us volatility dots. A red and a green on the same bar. So we'll see if that plays itself out. And you can see we're still in a weekly sell also there. Since up in here in the 4,600 area. And then we go over to the Tech 100 right there. There's the Tech 100, where the NQ is doing the same thing, trying to lift. You can see we've been in a weekly sell since up in here in the 16,000 area. This thing keeps on flirting with the 13,000 area, the 14,000 area line. Keeps on bouncing off of it. And you can see there, it's been in a weekly sell since this week up in here. And you can see we've gone into a buy on Friday. We're firm. We were firm here and up most of the morning so far and the European trading hours. And then they rolled over. And as you can see, on a very short-term basis, just to show you too on a short-term basis, since we have it there. You can see here, this is the London Swiss Open up in here. It was right there. They started trading there, Switzerland and Frankfurt and London, all like that, and they went from the 14,500 area, 520 area, down to the 14,400 area, 120-point drop, and now we're trying to, as you can see live here, it's trying to lift up a little bit. Quiet Monday, eh? Quiet Monday. What else can we say about that? I guess that's about it there. You can see the strength it's trying to come out on J4X. It's trying to lift. And you can see at the same time, right here, it has been putting in some type of weird saber-tooth bottom. I guess the question is, if it fails, where will it go next? You know, will it go down to the 12s or something like that? We'll see. This particular group of stocks, the NASDAQ 100 or the Tech 100, is very interest rate sensitive, enormously. And since I've been beating the drum here that we're very confused about what and where interest rates are going, since we think they're supposed to go up, but they don't seem to go up. We're real, the markets themselves are probably, they jump in, they jump out, they jump in. There's a good chance this drops another 10 or 15%. I could see this dropping 10 or 15% more. It wouldn't surprise me any, just solely because, the market's priced in 5 interest rate increases, and now what Mr. Powell said basically is that maybe the put is not free anymore on the stock indices, or maybe it is. That's what he said at the news conference. He kind of insinuated that it's both ways. So he's got to take a page from Turkey and Mr. Erdogan, and that is, give the free puts out or don't give the free puts out, but let us know. Free puts for everybody. All right. And so that's pretty. Oh, and let's take a look at the what would be considered like the weakest of the 4 stock indices we watch here in the States. The last one is the Russell 2000. Right. Right. There it is. And the Russell is making it's like a, what is that? It's a 1-year low, that's for sure. And you can see that there in December of last year, right there. So we've come down to that area. It's been one heck of that was all-time highs right there back in November of last year, and it's got that big ABC look to it. Like that's the A, and this is the B, and this is finishing off the C. And so that's where we are with what is considered the weakest. These are small companies, very speculative companies, and so they kind of are very, 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 very interest rate sensitive and very fundamental sensitive in the sense of if inflation is kicking up and these guys are not making any money to begin with or barely making any money, they're only capitalized, I think, $2.5 billion. I don't think it's 5, but they're very small companies. They could be something like $500 million to 2.5 billion, something like that. It might be that, or it's 5 billion. Either way, very small. When you figure that in the Tech 100, this is that you see here on J4X, that those companies have $1 trillion capitalizations, or very close to $1 trillion capitalizations. Okay, they're flirting with them all the time. They're like 998 billion type of thing, or $988 billion companies, and then the Tech, the Nasdaq, the Russell 2000 is like the opposite. It's barely yet. You know, it's just fledgling little companies that have gone public that have some really good ideas or strategies, but you know, 1 in 1,000 make it. That's how they usually figure that. Is that usually it's about 1 in 1,000 become the next Microsoft. So two of them in there out of 2,000 stocks, 2,000 companies. Two of them might become a Microsoft, or they might become, you know, a Nirvana, or they may become, a major pharmaceutical of some form, but not tomorrow morning or not next week. But it'll take, you know, months and years to do. But that's usually the way they look at that. So 1 out of 2,000 could do it, or 2 out of 2,000, something like that. It's I'm sorry, 1 out of 1,000, or in this case here, it's 2,000 stocks. So it would be, you know, two companies in there might be a major company 5, 6, 7 years from now, or 4 or 5 years from now. All right, where's that leave us? That leaves us with all the stock indices taken care of. Anybody care to see anything particular? Just shout it out. It's a real quiet day today. No one's really yakking about anything or asking about anything. I think I'm going to go back to the currencies. I want to see the GBP JPY. We have some webinarists that come in and they watch that, and it always catches my eye. I always find it interesting. It's a really good pairs trade. You know, it has a tendency to be consistent. In other words, once it gets into a trend, it stays in its trend, which is really what you want when you come to trying to trade anything. You want something that has consistency in its trend thing. Look, we have two of these, don't we? We have one there and one there. GBP CAD. So we can activate that one. And let's take a look at the other GBP CAD real quick. And we'll delete one of them. Just realize we have two of those in there. All right, so which one do we go with? That one or the other one do we delete? I like that one, so let's go to the other one. GBP CAD. Activate and delete. There we go. All right, now let's take a look at the GBP JPY. There it is right there. And as you can see, we went into a sell there last time we looked at it. And it's been in there until, what, 4 days ago. Went into a buy. And see that consistency? It gets into a buy, it has a tendency to go up. Now you can see here we've been in a weekly buy since this low area here. And that's the close of that week. And so it went into the buy. We were in a daily buy, a weekly buy, and had a nice trend to it. So that's not too bad. But I'm curious, like to see things like that once in a while. I like to look. Let me put the daily buy line in there, and we'll jump from there to something else. I'll just roam around since nobody seems to care today. All right, file save. All right. Is there any other currencies I want to take a look at that we don't look at much, and we have clients, or not clients, but we have sometimes we have clients come in too, but we have people from the webinar come in and ask about them. I guess that's about it. I don't see anything else that jumps out at me. We've taken a look at pretty much everything. Oh, dollar index. They spiked that on Friday. Oh, look at that spike. Dollar wasn't supposed to get strong. And at least in my mind, I didn't think it was going to get strong. There was no reason for it. I mean, we were in, weekly sells for months, for a month and change. You can see it here. And you can see here the dollar index itself is still fighting to try to get into the weekly buy. Maybe today it'll get up there. It's not trading live yet. It won't start trading. Is it trading live? No, it's not trading live. Let's see if it has a pre-market. But yeah, we're set for the pre-market. So I mean, we were looking. Someone on a tractor. Sounds like someone's moving their tractor right here. All right. Basically the dollar index is acting way stronger than we thought it would. So you can see it's jumped up past that range. Again, that's a sign that interest rates are going up here in the States, and obviously a sign that interest rates are not going up around the world, which again is not the most logical thing that should be happening in this financial era. All right, from there we're going to jump over to, let's take a look at some of the other products that are going on in here. There it is. Oh, you couldn't even see that. There it is right there. That's the dollar index. Look at that. You know, bang through that range. Maybe, what is that, like a 6-month range or something like that? 7-month range? Wow. All the way back to December, easily. And, you know, it's like a 1.5 year range, maybe 2-year range. So, ouch. And they gapped that. Look at that gap they put in it on Friday. Wow, they went into the buy on Thursday, exploded it on Friday. Oh my God. I guess someone knows that the Federal Reserve is not going to do what they're supposed to do. All right, now let's go back to the other chart. Let's see, is that it? No, that's not it. Well, we could look at this. You can see how the action, you know, we're swinging about a 30-40 point range in the Dow. We just were at 181. As I told you, it was coming down at 188. It jumped back to 220. So you can see there it's just fluctuating around. You can see the S&P 500 down just a little under 16 now, and the Tech 100, which was down 3 or 4 points, up 3 or 4 points, is now up 10 points. Look at that. Look at the way it's flying. We just went from 10 to 3 to 2. This market is just flying around. There's plus 3 points right there. We just saw it drop. And it just shows you the illiquidity of the marketplace at the moment. They're just nervous. Jumps to 4, jumps to 2. You know, it's got no clear direction whatsoever. Money doesn't know if it wants to get involved or not involved, take a profit, not take a profit. You see there, we're back, we just went from 6 to 3. I mean, this thing is moving so aggressive. It doesn't move like that. It normally moves in quarters. Instead, it's moving literally in points at times. You know, in 2 and 3 points at times. Look at it, it just jumped to 7, from 7 to 3, now to 4. That's the Tech 100. Like I said, look, it jumped 3 points. That's not normal. Now let's take a look at the S&P 500. And the S&P 500, you know, which was only down 15 and 3/4, is now down 17 and a half. And it's doing somewhat of the same type of action. Obviously, nowhere near as sensitive, but definitely sensitive. You know, I mean, in the sense of it's happening, it's moving. All right. What else should we look at here today? I don't see anything particular jumping out at me. I think we're going to just look at the intraday action, and also we got to find a title for today's market webinar. Let's see. How did we start this off this morning? I think we started talking about the idea that the Federal Reserve looks like it's very confused and going nowhere. That seems to be the nature of it all at this point in time. It doesn't really have, like, it does there doesn't look like there's confidence in the Federal Reserve at the moment. The level of confidence seems to have diminished. And I'm trying to find a good little title. We went through all the stocks and the currencies and the indices and you know, so forth and so on, and metals and oils. And out of all of it, the theme seems to be, more than anything else, is a lack of Fed confidence. That's really what it comes down to. It does look lost. It does and we're not seeing smooth action. We're seeing choppy jump around action. Let's see what this thing's doing now. +5 from a +4. We're not seeing the look at it. It went from 5 to 9 basically in 2 ticks. Now it's gone from that and 5 ticks down to 1. Now it's 3. That means money is nervous. That means money. In other words, when I say money, when we in trader exchange lingo, when you say money, we're talking about hedge funds and mutual funds and retirement funds are moving their products around because they're trying to take some profits. They're trying not to get burned. They're nervous. They're not confident that they can go to bed tonight and wake up with their assets where they should be. I mean, that really comes down to it. All right, traders, we're going to jump out of here. This is Doc from North America. We will catch you all tomorrow, same time, same channel. And happy trails to you until we meet again, which will be Tuesday. Happy trails to you, to all our trading friends. Hang tight in there, traders. Ta-ta for now.